And I'll just give folks some time to trickle in as people are joining before we take off.
Yep, I see lots of people joining in. Welcome, everyone. We will kick off in a few minutes.
Fantastic. And we'll give it a minute or so. Great. As people are trickling in, I'll get us kicked off, Rohan. Good morning, everyone. Good afternoon, evening to folks joining in, wherever you're located around the world. Welcome to Synaptic's webinar on demystifying the data-driven investors tech stack. That's still a mouthful for me, but we're happy to have you all here. And before we jump in, it wouldn't be a webinar if we didn't start off with a quick introduction of the host, myself and my colleague Rohan. It's just a quick intro on my end. You can't see the windows behind me of the flashing lights in Times Square and actually our first snow that's starting to fall, but I'm based in New York City. I lead the sales team here at Synaptic. I've been with Synaptic for about 3 years. And prior to Synaptic, I was at CB Insights for around 6 years, helping build and scale out their sales team. So intimately familiar with private market intelligence platforms and data, and really excited to dig into how private market investors and lots of crossover investors are using alternative data in their investment process, especially just given the big shift that we started to see even at my time in CBI in 2018, when folks started asking for APIs and data feeds on just about every call. So happy to be here today and dig in. Off to you, Rohan.
Yeah, hello everyone. I'm Rohan. I lead research at Synaptic. I've been doing private company research for almost 4 years now. Previous to Synaptic, I was at Bain & Company, and there I specialized in working with growth equity and private equity investors, helping them with due diligence and sector scans. At Synaptic, I work closely with our clients and our internal teams to figure out just new and innovative uses of data to generate interesting insights.
Thanks, Rohan. A little bit about Synaptic. You all can see, you're welcome to read what we have up on the slide. I'm not here with Rohan to dive into detail about Synaptic, but the TLDR on us is that we are a single pane of glass solution for all of your data, whether it's third-party data, internal data, and data sets that we mine or license ourselves. We bring it all together in one place to support investors in their investment research process. More importantly, the goal of today's webinar, though, what we're here to cover is really 3 key items that we want to leave you all at the end of this webinar going away with. One is to provide a structured framework to think about your data stack. 2, we want to introduce you all to some of the data and tooling options in the market. We know there are a lot, and we're obviously not going to cover everything, but provide a foundational understanding of that. And then 3rd, give you all insights in how to select the right data and tools for your use cases. Different investors have different preferences, and we want to touch on that for you all. And finally, just some housekeeping items. There will be a Q&A session at the end of this. We value everyone's participation. You'll see in the Zoom chat, you can send in any questions. Feel free to submit them throughout the presentation. We'll address as many as we can during the Q&A time, and if they're relevant in the middle of the presentation. Any technical issues, if you're running into any, our team is here to support, and we have folks that will reach out to you individually if you're having trouble logging in, or if colleagues, for instance, are trying to access the webinar. And then finally, you all can see that we are recording this webinar. So today's session will be made available for all registered participants after the event. Just keep an eye out in your inbox for the recording link. And without further ado, let's jump in from here. And we'll start out with the main question: why take a data-driven approach? Off to you, Rohan.
Yeah. So look, there's a lot of benefits of, as an investor, to take a data-driven approach. What you see on the slide is just a handful of different benefits that we've seen investors realize through a data-driven approach. There's a lot more, but these are some of the more common ones, some of the more measurable ones. And you'll see their benefits across the activity stack. And I think of these benefits as some of the output benefits, like better coverage, better screening, so you're not spending time on, or you're prioritizing the best companies to spend your time on. You can think of it around portfolio support, etc. But you can also think of benefits in terms of your inputs, right? Which in this case tends to be time. So you will get a lot of benefits on just reducing the amount of time it takes to do business as usual tasks. Now, one thing I do want to point out here is that when you think of these benefits, right, the approaches you want to use and the data sets you want to use and the tools you want to use to get these benefits can vary quite a lot. It differs from investor to investor and depends and differs by what kind of goal you're looking to achieve, right? So in general, the point is, in our experience, when you take an approach of looking at tools that kind of give you a little bit of everything, we've seen that not be very successful. What we've seen work really well is you be really ruthless about what you want to achieve and think of your data and tooling that you want to invest in really focused on that goal. And maybe Christian, you can add some real life examples to bring this to life.
Yeah, absolutely. It's interesting because there are so many benefits that you can take away from using data in your investment research process. And I think the inclination of people is to try and do everything at once. And I can specifically think of some large growth funds in Europe that we've worked with, and think anywhere from just under $1 billion AUM all the way up to 30 billion AUM. And when speaking, there's 2 to 3 that really come to mind, and I can think of conversations we've had with them when we ask, what benefits are you looking to leverage from your data? The initial conversations were everything in the sourcing category. We want to expand our coverage, we want to effectively screen, we want to gain access to deals. But really the crux of the pain was we're missing opportunities to invest in companies that we've spoke to before, and we're tired of seeing these announcements in VC newsletters. We want to make sure we never miss an opportunity to invest in them if we know the founders. And I think what we quickly realized in speaking to them is that they realized if they focus on just one element, like you were saying, Rohan, just being ruthless in that, effectively screening companies would trickle into all these other categories. By effectively screening well, they expanded their coverage and gained more access to deals. And specifically what they did with data, and I know we'll get into this more later, is they used alerts based on a combination of data sets that were specific to their parameters. So one growth fund looked at product reviews combined with employee data and employee sentiment. And what they would do is they would get alerts when these companies were reaching key escape velocity moments, and that triggered them to reach out to the founders. And we heard from these investors multiple times that they would reach out to the founder, and the founder's either about to raise or in the middle of a raise, and it increased their just their access to deals tremendously by implementing that approach.
Yeah, that's a really interesting example, really poignant as well, because we come across this quite often, right? Like expanding coverage is kind of everybody's, I think, first thing when they're going to think about data-driven approach. For a lot of investors we speak to actually realize that screening your deal flow effectively actually has a lot of untapped potentially some really good deals lying in your funnel where you've spoken to earlier, but just didn't prioritize or the timing wasn't right, and just tracking them really well could unlock a lot of value.
Yeah, and I think that's so common because people often say that we want to cover everything in the world, but oftentimes investors, the biggest problem is they can't even track the 3,000 or 4,000 companies in their CRM that they spoke to. And being able to really keep tabs on them, you got to start there before you try and bite off even more beyond that.
Absolutely. Awesome. Let's dig into the data stack or the tech stack now. Now, I know there's a lot going on the slide. Don't worry about it too much. We will dig into each of these elements one by one across the presentation. But what we have here is kind of the core, what we call the data stack for an investor, which doesn't include your stuff like your marketing stack or your HR stack or some of the knowledge management and collaboration tools, because those tend to be a little general, like not specifically fund oriented. What you see here is the data and tooling that kind of ties into your core operations and is designed for private investors. So the quick way to read this slide is just left to right. You have data sources on the left. We've divided them into alternative and internal data. Both of these will go through an infrastructure layer that basically just makes this data usable. And that usable data will then go to your UI or your tools that will then enable your investment and finance teams to basically do their tasks really well, which you can see on the arrows at the top of the diagram. Now, I'll leave this on the screen for a few more seconds, just for everybody to absorb, but we will dig into all of this one by one.
Absolutely. And while people are digesting some of the categories on here, please feel free to, again, just a reminder, send in any questions about specific terms or topics you want us to double click on here. It's okay if many folks in the audience don't fully grasp everything here on the screen. I know I certainly didn't when I first joined Synaptic, and that's exactly what we plan to do, is break these down one by one, like Rohan mentioned. So feel free to send questions in on the chat if you want us to focus on anything in particular.
Absolutely. So let's start with talking about the data sources, right? Now, we've put together a framework of how we think about data. So alternative data kind of has become a buzzword. Kind of means a little bit different stuff for different people. The way we think about it, if you think of traditional data and traditional research, right, it's typically based on two things. One is internal company data, and second is experts. So internal company data is anything like company updates, financials, even founder conversations are giving you some insight from within the company, right? And experts are basically experts that are either experts in the industry or the company that you're tracking, and you kind of use those viewpoints to bring together your traditional research. The way we think about alternative data is it's an external third-party sources of data that can bolster this traditional way of doing research by providing some more objective insights, right? Some checks and balances on some of that qualitative stuff. So within alternative data, we like to classify data sets by their function, right? So you have company database. These are data sets that just contain a large set of companies and some basic information on them. PitchBook, Crunchbase are great examples of these. These tend to be the starting point of any private company research that you do, right? Second category is performance indicators, basically data sets that give you a sense of whether a company or how much a company is performing well. There's a lot of data sets here. We put some logos on the slide, but this is just the tip of the iceberg. You can think of employee data, job openings, GitHub and foot traffic. It's a lot of different options in performance indicators. And the last category is enablers, right? So this is data that helps you take action. So think of intent signals that give you an idea of when a startup is looking to fundraise, helps you time your approach, right? You can think of relationship data that helps you figure what's the best way to connect to a founder. So basically data sets that are helping you take action and execute deals, right? Yeah, that's about it on data. Again, keep asking us, keep throwing questions our way. We'll try to answer a lot of those within the flow, but also towards the end of the session.
Actually, Rohan, one question that we are getting, and I know we'll probably cover this more at the end, is of course, naturally, this wouldn't be a webinar if we didn't get a question on this, but people are asking about generative AI and how it can be implemented into this data-driven approach. And that might be a question that we should save for the end, but just something to read out for you that just came in live.
No, I think it's top of mind for pretty much everyone right now. I think, to be honest, there's a lot of content to cover there. We can probably do another session on that. But just a quick, I guess, a quick overview on that. I think the biggest impact we're seeing is in custom research. Some of the manual parts of custom research being automated by LLMs. We're seeing some impact in company databases where you can get really good descriptions about companies. Industry tagging can be automated to some extent. You can really search companies really well by using semantic search. So some impact across some of these, but yeah, we can dig a little bit deeper into that towards the end of the Q&A section.
Yeah, absolutely. Yeah, and I know as you jump into the next slide, the one plug I'll make is I know that's been a hit amongst many of the investors we work with is the LLM search across company descriptions. It's another very detailed way to pull out interesting companies in niche industries like, for example, oil pumps, and doing specific keyword terms where you can identify companies you may never have been able to with the traditional taxonomy. So exciting stuff happening on that end.
Absolutely. Cool. This leads us to kind of the second topic discussion. As we mentioned, there's a lot of data sources out there. Probably you guys know really well how many from your interaction with vendors. So it becomes really important to have a structured approach to selecting the right data for your use case. Now, these are just kind of 4 important pillars of doing that. Now, coverage basically means how many of your interest companies are covered by that data set, right? So one good example actually on coverage is GitHub data. We're seeing it become really popular with investors over the last 6 months or so. And one of the big reasons is that because of that interest in generative AI actually has a really thriving open source ecosystem. So GitHub data covers the space really well. You can find really interesting companies, and that increased coverage in interest area is kind of driving uptake for GitHub data, which you would otherwise think is a pretty niche data set, right? So that's coverage. Predictive power is kind of obvious. You want data sets that correlate really well with underlying performance of the entity you're trying to track. Timing is an interesting one. You don't typically think about this, but a good example of this is private company filings, right? So, for example, in the UK, private companies need to file a P&L with the government. So you could scrape those filings and get actual revenue data for private companies. And you think that's amazing, right? You have, what more do you need? You have revenue of private companies. But the catch there is that there's a 9-month allowance on reporting a P&L after the reporting period. So that data is typically lagging by 9 months. So for a use case like sourcing, where speed is of the essence, I think it just doesn't work because you're getting information too late. You can't really just use that data set as your primary sourcing method. Popularity is, again, kind of obvious, but you really like the dream data sets are the ones that really work well for your use case, and not a lot of other investors are using, right? A proprietary data set that's really powerful is kind of the icing on the cake. Awesome. Now, the next thing we want to cover is the infrastructure layer, right? So as we mentioned earlier, data sources typically, especially if you have multiple data sources, which you should, they need to pass through a layer that integrates all of that data, maps entities, standardizes the data, and just makes it usable, right? And this is where actually a lot of complexity lies. Christian, maybe you can add from your 6 years of working in this space, you can add a few examples of what drives some of that complexity.
Yeah, absolutely. I can think even just in my time at Synaptic alone, when we speak to various data teams, this is probably the area that people run into the most bottlenecks with their time. And if you think about something like entity relationships, it is incredibly detailed and nuanced to master this infrastructure process. So let's illustrate this with product review data, or even GitHub repos, for example. You can have a company like Microsoft, and there's different data at the company level, and then there's different data at the product level or the GitHub repo level. And those multiple products or multiple repos need to be tagged and mapped to that individual company, so that when you compare, in this example, Microsoft with other companies, you need to know which products to compare. So for example, if you want to compare Microsoft Teams, you need to be comparing that to products like Slack, and you need to be able to have all of those detailed taggings mastered. Other areas where we see this come to play, especially in the startup ecosystem, companies are changing their websites multiple times, right? We have someone start with a .io, then a .co, then a .com, and you need to know exactly which website they're leveraging.
.ai now.
What's that?
.ai is what they're changing into nowadays.
Exactly. Yeah, whatever the latest trend is. And I think what you run into here, and this is the interesting piece, so many data teams and folks think they can automate this, and that'll only get you so far. And maybe you can automate it if you're working with 1 to 2 data sets. But what we found in our experience is you get about an 80 to 85% accuracy rate at best. And if you are rolling out this data to your investment team with 80 to 85% accuracy, you immediately lose credibility. And if the whole purpose of building a data-driven approach is to get your firm to use data more effectively, people aren't going to use data if it's not as close to 100% accurate as possible. And I think this is the nuance that investors always miss. I know at Synaptic, it's where we spend the majority of our time, is really making sure that we master this process. And it's why the quality of your data is just so critical in this step of the data stack.
Yeah, we used to do this manually when I was at Bain. It used to be a nightmare. Anyway, so we really want to bring this to life for you and kind of show you exactly how a really good infrastructure can enable very powerful analysis for you, right? Now, personally, for me, this is the most important slide we're going to show you today. When you think of really like the top data-driven investors, what differentiates these guys is typically not just having a lot of data sources, not having some proprietary data source that nobody else has access to. It's typically the fact that they have really good infrastructure, which allows them to do powerful analysis at scale, right? So what you see on the slide is kind of from top to down, you have different levels of analysis, starting from really low complexity, going down to high complexity. And each comes with different requirements on your infrastructure, right? So at the top, you have company level analysis. This is basically you have a company in mind, say Stripe, and you want to look up some data like web traffic and product reviews to see how it's doing. You can do this, like all you need is data access and some manual work to like search the company and pull the data together. You could do it for 5-10 companies manually, pull the data together and compare them, but this is not something you can do for like 1,000 companies. It's not really scalable, right? Level 2 is where scalability comes into play. So if you have data, say website traffic in a queryable database, and you had some UI where you can start a query, right? Then you can do a query like show me all startups with greater than 50% web traffic growth. And you can do that for thousands of, if not millions of startups in one go, right? So you can see that the search becomes a lot more powerful because it's scalable and you're searching a really large data set in one go. Level 3 is where you'll start seeing like really, really powerful searches, right? But it also requires an exponential amount of complexity in your infrastructure. This is where the data integration, some of the challenges Christian mentioned come into play. You have multiple data sets tagged together. You can do a search like, give me all SaaS companies in North America with like these 3 different performance indicators on those.
Yeah, and if I can jump in here, actually, I think this is the emphasis here on the importance of enabling an investor to add data sets at scale. Until you can really master that tagging and infrastructure process, this is where the data stack really breaks down for a lot of folks that are trying to build an internal process if they haven't mastered how to tag all of their data sets here. So to your point, I think it's just really important to think about the gap between level 2 and 3 that people often run into.
Yeah, absolutely. I think there's a big jump from 2 and 3. Level 4 is like you can add one more layer on top of this. When you have integrated data giving you signals from different data sets, you can build research and modeling on top of it and create like composite scores that indicate like different kinds of startups that are doing really well. This simplifies the UI as well as makes the analysis a lot more powerful. And when you really think of funds like EQT, Signalfire, CoachU, what differentiates them is they're deep into level 4, right? They have integrated data sets, really scalable infrastructure, and they're building like really interesting models on top of it to guide their investment process. Awesome. Now we put in a couple of quick polls for everyone, mainly designed to give us a water break, but we'd really like to know where you guys are when you think of this kind of complexity level in terms of your infrastructure and the kind of analysis you can do. You should see it pop up on your screen. We'll give it a few minutes. Yeah, let us know.
Yeah, poll 1 is up there. Unfortunately, I can't vote to skew the results. Let's let that sit up here for another 10 seconds or so as people are voting and taking their quick breaks, Rohan, and then we'll go to the second poll.
Yep. Also, one point I do want to make around the infrastructure complexity on the last slide. Now, as I said, like you need like a really good infrastructure to enable that powerful analysis, but just keep in mind you don't have to do it in-house. I think there's a lot of good tools in the market. Some of the best tools I would say are have that infrastructure and kind of give you access to that out of the box. So you get this like without having to build it in-house. Awesome. Maybe let's close the first poll. I'll put poll number 2 on the screen.
I think this poll, I'm really interested to see where folks are, and we'll read the results from poll 1 quickly if everyone else can see them. Almost 50%, we have 45% of the votes are in at level 1 company level analysis, which I think that's consistent with what we see from most of the investors we work with. And then you see almost on a sliding scale, level 2 and 3 relatively equal. We have 15% and 18%, and then level 4, not many folks are there. And I think that speaks to just where we are in alternative data coming to the private markets. It's complex and difficult to do, and we're seeing people just start to tap into this. And the second poll kind of ties into that well, because for folks that have been in this space for a couple of years, I think there has been an exponential growth in different tools that are available. I think a lot of people are expressing decision fatigue or paralysis. So we're really curious just to understand where people are prioritizing their focus in 2024 with their data and tooling efforts. And you can see the different buckets we've put them into here. So please take a minute to vote on this one as well. Looks like we're still getting some votes coming in. I think,
all right. I think we're 30 minutes in, maybe.
Yeah, I think
poll 2.
Post the poll out for anyone that hasn't voted. I'm still waiting on my results to pop up, Rohan. There we go. It's coming. Again, not a surprise. Yeah, go ahead.
Yeah, I mean, we're focusing the rest of the presentation on exactly the areas that came out on top. So
yeah.
I'm gonna undeservedly claim we predicted it, but yeah, I think it's kind of matches what we hear from a lot of investors we speak to. But luckily, I think the areas that have come up on top, sourcing, diligence, and portfolio, are some things we're going to cover in the next 15-20 minutes really well. So amazing. I think let's move forward. I think we had a question on tools as well, so a good time to just get straight into the tools. I'll put the framework on the page, framework page on the monitor. Now, first thing I want to just say is we really wanted to make this like an exhaustive list of tools with all the logos on a map, but it's just impossible. There's like about 250 tools we're tracking internally in the space, and we probably missed a few ourselves as well. So it's a really like the word proliferation, I think, just does the market justice. There are a lot of tools. Just to orient you to the framework, I think the among the core tools, I would say like there's 4 core types of tools. Yeah, your CRM, your sourcing tool, your portfolio management, and your fund admin tool. There's a few variations of these. You might have something like a cap table management or a fund accounting tool, but I think broadly all of these fit into these 4 categories. You have a few emerging kind of new gen categories like job portals to help your portfolio companies. You have network and community management tool, which is doing some interesting stuff on how you can leverage your network a little bit better. And you have general tools that pretty much any business would use. But yeah, that's the overall. But Christian, I'd love to hear from you how this has evolved over your years in the market.
Yeah, absolutely. And this immediately just reminds me of that. Something we often say here is that there's this commoditization of data and various solutions. And I think this is relevant as well to one of the questions you're referring to that are in the chat, which is how are providers differentiating themselves in the market? And we talked about a goal in this webinar really being to help people identify the right tools to select. And there's so I'll answer that question about differentiation and then talk about some things that I think are really important to consider. And they may seem obvious, but for folks to be weighing when they're bringing on a different provider. So on the differentiation point, I think there are, I would say, 3 core areas that people are really trying to differentiate themselves. One is on price, and you see people becoming more competitive with their pricing offerings that they're providing. The second is in the product and how you can manipulate or leverage and access that data in various products. What insights are you able to pull? And then the third is linked to that is data availability. We're seeing some of these providers become more liberal with the data that they give access to, for example. But the fourth that I think is often overlooked and really allows vendors, and it's something, of course, we're proud of at Synaptic, is this customizability, which you and I talk about a lot, Rohan, when we're on calls with various investors. Maybe you can speak to that a little bit as well yourself about why that's so important, just since you've sat in the investor seat before doing the diligence exercises during your time at Bain. Yeah, I'll pause there and then touch on some other topics after that.
Yeah, no, that makes a lot of sense. And I think one of the reasons like there's so many tools in the market, I think is just because every investor is unique, and no one tool kind of solves your problem really well. And I think a lot of tools see that no one single tool is solving it really well, and that's why like a lot of tools come into the market in this space. So in my mind, that's why customizability is really important. Like if you go in to chat with vendors and you're looking for a tool that just out of the box fits your workflows really and your needs really well, that's a long shot. In my opinion, you should really push vendors on how can they customize the product for you. And like we covered a little bit before, you should really like keep a keen eye on their tech stack, and can they add more data sets in time? Is it future proof in terms of adding any new data sets that you find and enable you to do those powerful analysis that really hits at the core of the value?
Yeah, absolutely. And I would say another thing just on the evaluation piece, if you're an investor thinking about what tools to bring on to your tech stack, it's really interesting because when you're doing diligence on making an investment in a company, you're asking the same question: is this company a company that will last? And I think as an investor bringing on these new tools, you need to be asking yourselves, is this a company that's going to be around? Because we talk about the integration and infrastructure piece. The last thing investors want to do is spend all this time invested in bringing on a solution only to see that company's run rate is 12 months and they're going to be out of cash and shutting down And that just creates a lot of problems internally if you're not anticipating that. And the other thing I think of as well is the company that you're in. If you bring on this vendor or tool provider, what other clients are they servicing? Are you in good company with the clients that you think are industry peers? And is that a community of clients that you'd be proud to be a part of? And are they even willing to give you customer reference calls as well to hear unbiased inputs outside of the sales team? So those are all things I would really press upon when looking at some of these providers.
Yeah, if there's an investor that you feel is very similar to you in terms of investment focus, and tools is serving them, I think it's a good validation that that tool might fit your use case really well as well.
Yeah.
Awesome. Let's move on to sourcing platforms now. As you can see on the screen, right, when we think of sourcing platforms, we don't think of just data sources, right? There's a lot of just data providing vendors out there that we claim that they're a sourcing platform, but for us, it needs to have all three things. It needs to have that infrastructure, so you don't have to build it yourself. It needs to have multiple data sources, not just one or two. It needs to have really good UI and features that enable you to like do your job really well and execute your workflows with very little friction. Digging a little bit deeper into this, this is what we think a good sourcing platform should look like. It should have a company database. That's obviously your starting point of your analysis. You need a database that has a lot of companies of your interest areas in it, right? Otherwise, you're not really going to expand your coverage if there's not a lot of companies in the company database. You need a people database. If you're an early stage investor, you're basically trying to find founders instead of companies, right? And people database kind of becomes your main bread and butter database. In that case, even for a growth investor, you need people profiles to evaluate founders, to get contact info, etc., to reach out to them. Second is performance signals. Here, the more data sets, the better. Typically, in combination, these data sets become quite a lot more powerful. So you want to have a lot of integrated data sets that give you performance signals. And you also want to have some composite scores, some data models that help with customer identification, North Star metrics, etc., to guide you through that. Now, the UI and workflow layer is actually surprisingly complicated. This is something I learned after I joined Synaptic. A lot of data teams within VCs are actually really good at the data work, right? Like they do it really well. They figure out like really interesting insight from the data, but they still find that some of the internal tools the investment team just wouldn't use very often. And it tends to boil down to how many different UI and workflow elements you need to make it seamless for the investment team, who's just because people are so busy in the space, even a little bit of friction can cause a decline in usage. You can see some of the ones here on the screen, but there's a lot of small elements, and this is where you should really demand customization as well. The UI and workflows really need to match your fund activities really well for it to really see like good usage and then eventually drive value.
And I think as well, Rohan, it's if you're a data engineer or on a data team listening in, I think unanimously when we speak to those teams and we ask them what the least interesting or one of the more difficult parts of the building process is, data teams love modeling and working with the data, but building a UI and making that simplified is sometimes one of the least interesting things that data teams want to work on. And I think that's why this is often neglected as well. Just what's interesting is where people will spend a lot of their time.
Yeah, the UI and I think just integrating data sets also tends to be a real pain point for data teams. Amazing. Now, in the interest of time, we just want to wrap this up in 5 minutes. So we're going to give you a quick snapshot of portfolio management. Now, for portfolio management, right, I think one of the big issues tends to be that you get company updates in a lot of unstructured sources, right? You'll get Excels, you'll get PDFs from founders, you'll get sometimes a Notion document or an email. There's no standardization of what kind of metrics each startup reports. Every startup wants to tell their story in like their own different metrics. So it's really hard to like do both, which is like track companies with depth, where you're tracking like a lot of metrics for each company, and also do it at the full breadth of your portfolio, right? So see a lot of investors either just focus on a few of the most important companies to track deeply, and everything else is kind of just the big picture items like revenue, ARR, etc. Or spend a lot of time manually compiling reports, right, which tends to happen with later stage investors. Now, what we think as the ideal portfolio management solution, and this is a bit of a plug because we're right now in the process of building this. If you're interested, reach out to us. It'll be available in January. But it's a platform where all of this internal company data in all of these unstructured formats can be ingested, and you should be able to really track pretty much every metric that is reported in the company updates. We calculated it's about, on average, about 200 metrics that every company reports in their updates. You should be able to audit any number, really see which update that number came from, and you should be able to see how many times that number has been restated. A lot of times startups will restate numbers, like different numbers between Q1, Q2, Q3 for the same time period, right? You should be able to benchmark startups across any metrics. This could be your portfolio companies as well as companies you're diligencing. And the data should be clean enough that you can build like really good forecasting and valuation models on top of that. And I would say like if your portfolio tracking today involves a lot of Excel, I think what we're building will excite you, and you should hit us up.
Yeah, absolutely. And for the plug here, if anyone wants to have a conversation with Rohan and I, my email is christian@synaptic.com. Rohan's rohan.gupta@synaptic.com. Feel free to send us a note. We're happy to chat about this in any detail and answer questions that folks have. I think that brings us to the end. We'll take a moment, transition into the Q&A, but thank you everyone for joining and giving us your time on a Thursday afternoon. If you're East Coast, then a morning, West Coast, folks all over that are joining in. So thanks again.
Yep, great to see so many people join in, and hang around for the questions, and do keep posting some questions on the Q&A. Yeah, I'll maybe stop my screen share. And we can just go along answering questions. Awesome.
Well, I see one that's coming in, and while others trickle in, Rohan, it's around the generative AI question. There's another question of just saying like where is generative AI? Where are investors most excited to apply generative AI? This might be redundant of what we touched on a little bit, but maybe we can touch on that question a little bit, and also how are people applying that we can touch on as well.
Yeah, I think the first wave of change from generative AI is really going to be wherever you have unstructured data, right? So there's a lot of data sitting in like call notes because investors are doing a lot of calls with founders, with experts, etc. That's one. There's a lot of unstructured data in news, for example. If you're tracking news really well, you can use LLMs to really summarize and tease out insights from that. There are other data sets like product reviews, for example. Now, the rating parts of the reviews are easy to kind of tease insights from numerically. But some of the actual written reviews, you can really use LLMs to draw out some themes from there. As I mentioned, company descriptions is another one, like just really across a lot of company database, the descriptions generally tend to be really underwhelming, very hard to figure out from those what the company actually does. So I think LLMs can definitely help there. And in terms of the UI, I think just semantic search and just kind of text-based queries instead of having to apply filters, etc. That's the big change I foresee with generative AI. A lot of interesting stuff on the horizon for sure. A lot of experimental tools coming out. We put a couple in the market map that we showed as well. One was Deck Match, which basically auto analyzes your pitch decks that you receive. All of these tools, I would say, like take it with a pinch of salt. Really interesting use cases, but I think the accuracy levels right now are not up to a stage where you can start using them very regularly. But I think very soon they will be.
Thanks, Rohan. There's a few more questions rolling in, so I'm just going to look at ones that we can take in here. I'll read this one off right now, and if we don't get to all of the questions by the end of this, we are happy to email you individually or chat more on these. But one that came in is, what would you say is the most important first step for a small VC firm that is just now starting with an intent to take a data-driven approach to both sourcing and portfolio management? That's an easy answer for me. I'd say talk to Synaptic, because that's a sweet spot that we work with a lot of firms. But and another, yes, we'll absolutely share the presentation with all the recipients. But maybe Rohan, you can talk about that a little bit as well. Just taking Synaptic aside, how do you start from a basics approach if you have it? And I want to just, to whoever submitted this question, reassure them that that is where the majority of private market investors are. I think we recognize not every VC firm is a multi-billion-dollar fund that can just throw tons of resources into this. So you do have to be really thoughtful about your approach. And from an investor seat, Rohan, maybe you can speak to that a little bit more.
Yeah, I think the way I think about it is just so sourcing and portfolio management is mentioned in the question, which are good goals, but I would refine the goals a little bit more, right? Really figure out where it'll be most value, right? So examples include, like, you have small funds that are real like sector specialists, right? And their deal flow comes from a few specific areas. Either they're really well connected, say university labs, or other research communities, right? So basically, for a fund like this, right, expanding coverage is actually not that valuable because your deal flow is good. You're connected in exactly the right places, and the kind of companies you're looking for might not be in a lot of different data sets. So the real application of data could be like in screening those companies effectively and kind of getting alerts for when to reach out to those companies, when they might be just inflecting and looking for funding. So basically, point is just take a crack at really looking at what exact benefits you're looking for within portfolio management and sourcing. Second, I would say is just set some criteria for how to evaluate vendors. I think we made a lot of funds where they test it out, they trial everything, but there's no kind of structured way of evaluating tools or data sets. So if you're looking to expand coverage, you should have a metric of like, hey, maybe like, say, if I find 100 companies within a few days on this tool that I hadn't seen before and are interesting, then this has definitely helped me expand my coverage. So just clarifying goals, setting a bar for like what would be valuable, and then just speaking to vendors. I think as many as you can speak to, and like I said, like just push really hard on customization. I think that's the only way things work in the space for your personal workflows. Yeah, that would be my 2 cents.
Thanks, Rohan. I got other questions coming in on the portfolio piece. And first, I'll answer this question for us. What is our price point for the portfolio management solution? But I don't think folks aren't going to love this answer, but the short answer is it depends. It's going to depend on how many portfolio companies you're tracking, what type of investor you are. It would be doing you a disservice if we just gave a canned rate on that. But think of it as volume based, and we're happy to chat on that more individually, depending on which investor you are. Another question here is, how do you benchmark data of portfolio companies against public competitors? And I can touch on this a little bit, Rohan, and then I'll pass it to you. But I think the key is integrating data from providers like a Canalist, for example. And that's where, when Synaptic can unify your portfolio company data and be that single pane of glass solution with all of your other data sets, and integrate something like Canalist, that's what it would enable us to help clients with the benchmarking. If you want to add any color, feel free, Rohan.
Yeah, I think that the actual complex part of that problem is not really getting public companies' data. It's available like in a lot of places, but it's actually like getting the metrics for your portfolio companies. That's actually the bigger challenge there, right? If you have like portfolio companies in the hundreds, getting like the level 2 metrics, right? Beyond just like revenue, ARR, like if you want to get into churn and like CAC and like net new ARR and stuff like that, you really need to like pull that data out from company updates. And there's no like, right now, there's no very quick and scalable way to do that across hundreds of companies. That tends to be a bigger challenge.
Yeah, absolutely. Thanks for the context there. And I think there's one more question coming in. And I'm happy to take this one. How do you recommend negotiating on pricing from data providers? A few things there. I would say one, it depends on the data provider. If it's a data provider that's similar to countless others, for example, if it's a credit card transaction provider and they're getting their data from the same credit card panel, comparing the price points there and being transparent with the sales rep that you're working with about the various quotes that you have, vendors will be willing to compete on price there, if it's the right vendor that you're working with. And then another piece is I would also think about commitment to working with that data provider. Are you willing to sign up for multi-year agreements? I think some folks are willing to offer more flexibility there. Kind of a give to get situation when you're working with those providers. See what you're willing to do that's above and beyond maybe their standard contracting if you're looking to get a more competitive rate. Those are key things that come to mind.
One hot tip there, it's coming, Q4 is coming to an end. All the vendors are looking to, make their year look good. So if you close a deal, if you're looking for discounts right now is the time to ask.
You gave away my only secret. That's not a secret. Yeah, that's exactly right. If you want to bring on Synaptic before the end of December and help our sales team finish on a really strong note, that's another great way to get more flexible pricing from many providers. And I think especially coming out of 2023, there are some data vendors that have had to scale back a little bit, and it'd be a good year to take that approach with some in this market. I think there are some other questions that we can get to that are really more relevant on an individual basis that we'll get to. But that covers all of the key themed questions that I'm seeing come in, Rohan. Again, thank you everyone for joining. This was really fun, hosting our first webinar. And thank you, Rohan, for putting together the presentation. It was
Pleasure.
a good refresher for me as well to go through a lot of that. So I think that closes everything. Thanks again, everyone, and happy holidays to all the folks that joined.
Yeah, and do reach out to us. Like, if you just want to have a conversation, we promise we won't try to sell you Synaptic. We can listen to your pain points and offer solutions to the best of our knowledge as well.
Yep. More questions coming in just last minute that are relevant. So this one we can answer actually. We'll close on this one. Most used data sets on Synaptic. Rohan, I'll let you lead with that one because I think
Sure.
Good.
So I think in general, I'll give you a better answer than just Synaptic. I'll tell you what's happening in the investment world as a whole. When you think of basically in terms of data usage, I would think of the big three, right? The big three tend to be the firmographics, website, and employee count, right? This is data that pretty much every data-driven investor is tracking. Firmographics is basically just funding information, valuations, company descriptions, tagging, etc. Website traffic, typically SimilarWeb or a Sensor Tower, those kind of data sets. Employee count typically comes from LinkedIn, and you can track it at different levels of depth. But I think those are three that pretty much every data-driven fund is tracking. Outside of that set, I think some interesting ones are job openings. And you kind of get into a slightly niche territory also. The data sets that make sense for certain sectors, like app traffic is really, really good for businesses where the main UI is the app. So mobile games, for example, app tracking is probably the only thing you need to gauge companies there. You could have GitHub, as we mentioned, is a really interesting one coming up, primarily driven by the fact that two of the biggest trends of the last few years, generative AI and Web3, both have a really thriving open source ecosystems. But yeah, beyond that point, I think it's more about what sector you're tracking and what are the most popular data sets there. Credit card panels, for example, for B2C companies.
Thanks, Rohan. I think that closes everything out for us officially. Again, feel free to connect with us on LinkedIn, email us. We're happy to chat in more detail, but this has been a lot of fun. Thanks everyone for all the questions, and we'll chat with you all soon. Thanks.
Thank you. Thank you, everyone.